Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin. Dennis is out again today. He's got a sick family, so hope that they all feel better. But we've got two guests for you today. First up, joining us at 8:15 will be Nate Tobik. He is an investor and the founder of CompleteBankData.com, a comprehensive source for analysis really and data on the financial sector. And then at 8:35, we're joined by Phil Davis, who's the founder of Phil's Stock World. So we've got two guests for you today. We've got some breakouts to discuss. Boeing, Nvidia, ABBV, the JP Morgan Healthcare Conference starts today. Earnings later in the week, some retailers making news as well. And we have Bitcoin and leverage, ETFs. So a lot to get to this morning. Joel, how's it going?
Big range in the S&Ps overnight. We sprinted to 27.47.75. That's your all-time high. Reverse course, and we are now down 450 at 27.38. On the downside, see minor support at your pre-market low of 36.50. Under that, we get into yesterday or Friday's range, the intraday low at 26.50. Moving on to the crude oil market, we are trading up 17 cents at 61.61. Gold down 330, really trying to clear that 320 hurdle for good. Silver down 12 cents at 17.16. And Bitcoin down a bit here, struggles over 1,600, but now showing under 1,600 at 15,400.
Joel, what about these Bitcoin leverage ETFs? Direction, which is, I think, the largest provider, one of the largest providers of leverage ETFs, they filed with the SEC to launch leverage ETFs based on Bitcoin futures. So not Bitcoin itself, but Bitcoin futures. What do you think about that?
Yeah, Wall Street trying to capitalize on the Bitcoin market and, by creating new products here. I did look at the futures volume, and the SIBO seems to be getting some decent trading, but the Merck contract has not exactly kicked off yet. So I don't know, Spencer. I mean, we're just creating leverage upon leverage, and I guess that's okay when things are going up, but when things start to go down, then you have to worry.
All right, where would you like to go? We were talking to Dennis a few minutes ago. He was telling us about some breakouts he was watching. You want to start there? Do you want to start with some healthcare? Let's just start with the breakouts that Dennis had on his radar. He was mentioning Boeing. He was mentioning, I guess we'll start with Boeing. Boeing and ABBV are the two that he highlighted. So let's start there with Boeing and tell us what you see on this chart.
All right, Boeing, just a monster, had that breakout on Friday. Looking at the daily chart, consolidations right near the all-time high, 4, 5, 6, 7, 8 days of quiet ranges, and then you cleared that 300 hurdle, 299.33 was it. Short scrambling for cover, closed on its high tick of 308.84 of high at 889. Trading up at the pre-market, I'll give you your pre-market high of 310.80. So nothing on top, but if you're coming back and you come back down through that close at 308.84, that was your all-time closing high, could be some trouble on the downside. Of course, the support will be where that old resistance was, and that was just under $300.
And when you see a breakout like this, what is the first thing that you think or that you do when you're watching? You're watching.
I try to buy it, man. If I'm watching it, consolidation.
If you're watching it, okay.
Try not be short. Number one, right? Because you're going against the trend. But use it. Keep an eye on something like a big level like that. And sometimes, if you really want to try and catch it, and you're trading different stocks, then you could put a buy stop in. Who knows where you're going to get filled on it or a buy stop limit. But if you're shorting against something like that, when you got to see if the size goes, and sometimes a buy stop either to get you out of the short or catch the long is the best way to play it. As far as targets, when something like this happens, you look at the 9-day average trading range and see what the expectations are. I think in this case, it really far blew it away. But in day after, you always want to keep an eye on the all-time closing high.
All right, let's go to another breakout that was on our radar, and that is ABBV from Friday.
Okay, the stock, one of the few healthcare stocks that's really, really been having an impressive move. Taking a look at ABBV, ABBV. For those looking at home, Dennis would say, I have this one in my portfolio. I've had it for a long time, and that's a good one to have in your portfolio. This one, you had a pair of highs just at 100, 110, and 112, right? You broke out through there. You closed right off your high of 101.20. So now that old double top will act as support, keeping an eye trading up at 101.90. Once again, you just want to make sure it doesn't go red on the session. This one didn't quite have as big as run as Boeing. It's a little lower price stock, but it does have some nice ranges. If it opens up, looks like you settle an early morning low, then just find out the 9-day average trading range and use that as a potential target. Coming back on the downside, if it takes out 100, have some downside until Thursday's close of 99.38.
All right. Another one on our radar this morning with some news too coming out of CES is Nvidia. They announced a technology for an AI computer system. I'm sorry. First, we have a few headlines. One, Uber selecting Nvidia as the provider of the AI computer system for its self-driving fleets. We also have Volkswagen and Nvidia announcing the use of an Nvidia chip. We also have Nvidia really going all in on the autonomous driving computer platform space. Several announcements here with regards to Nvidia and their computer chip is being used for self-driving cars. Stock is up a little bit this morning on that news. Joel, tell us what you see.
Up again. The stock has been on a really nice tear here. Started the year under $200, and we just hit 220.90 in the $221.95 is your pre-market high. So keep that 221.95, 222 as a potential target on the upside. Above that, there's nothing in there. Coming back on the downside here. Your former all-time high was made just a few sessions ago, actually a few months ago. You reached 218.67. That was back in earlier in January. So keep an eye on that and look for any kind of pullback to that old all-time high. You can use that as support. But as of right now, nice run, nice looking chart in Nvidia.
All right, let's go to Kohl's. They had some guidance this morning. We had a couple of retailers release guidance last week. It wasn't good. Kohl's this morning reporting their November and December combined sales increased 6.9% year over year. They were now raising their fiscal year EPS guidance by about 30 cents, and the stock is moving.
And they like it. You did get some bad news, but now you get some good news coming out of the retail sector. They like this after a bad couple days. Really, Wednesday, Thursday, and Friday, the stock took some heat, was finding resistance at 56, but now that is in the rear view window. 59.13 is your pre-market high. If you're looking for a continuation on the rally here, 59.67 was your high in December of 2016. So call it 60. We haven't seen the 60 handle since September of 2015. So that could be a nice level. Former high, the move was from December 26 at 57.28. So we're only a buck away from there. That could act as minor support.
What were the ones from last week? Right, we had L Brands. There was two, right? There was L Brands, and there was what was the other one? Cannot remember now. But let's pull up that L Brands chart. How do they digest that news on Friday?
That's a good point you make there, Spencer. And whether it's it's earnings or earnings guidance or something, you really like to see how a stock reacts that day. And on many occasions, it will hit hit a low that day, and then boom, just keep getting pounded. But sometimes, and this is the example here with Al Brands, on the day of the bad news, shorts use the opportunity to buy some stock, and you made a low at 49.15. The next day you couldn't even get there. You got to 49.90. So if you're trying to swing trade, we are trading down to $1.29 here. If you're doing a swing trade, use that low, the low of the move, as a stop out point. Now you are trading in the red here, so you're going to be testing that 49.15 low. But the way I look at it, it's opening into support here. At least that was support on Thursday. And if you go a little farther out in the dailies, you had 3-4 highs in the 48 handle, the upper 48 handle, 48.5. So even though you're getting a down open here on L Brands, let's see, is anything traded on this? A couple small lots have traded. So you're getting a replay here Thursday if you want to buy this thing in the lower $49 handle.
All right. First rating that I saw this morning, actually, I looked when I was just woken up. I was still in bed. I was on Twitter, and I saw that Longbow had downgraded Gopro to neutral, and they had Longbow said in their note that they expect a negative announcement. I don't remember if it was in the coming days. I think they said at CES. They expect a negative announcement from Gopro this week with regards to either layoffs. I can't remember exactly what the headline said. I was like half awake, but GoPro getting downgraded this morning at Longbow to neutral.
All right, trading down here, 33 cents at 7.19. There's really only one number to be concerned about, and that is the all-time low on GoPro at 7.14. That was made in March of last year. I mean, I don't know why they would go to CES to make a bad announcement, but if that's what the analyst is thinking, that's fine. This stock, can hardly catch a bid at any level, but 7.14 opening into the all-time low. Better place to cover a short than perhaps to take a long. Maybe $7 is never traded at area, so could be some buyers there. Coming back on the upside, you don't want to get too excited about this thing unless it can clear. Really, the last 5 closes were at the 750 area. So until this gets over 752, which is Friday's close, I expect selling pressure in GoPro.
All right, one more until we go for our first guest, and that is Snapchat catching a downgrade this morning as well. From Jeffries, Snapchat downgraded there to, I just lost it on my screen there. There we go. From buy to hold, Snap.
All right, there was some bad news out on that a couple days ago, and they hit it down to 14.27. It rebounded. Next day found a low in that area too. I keep an eye on below that 14.02. That was your low on December 5th. So since popping up over 16, you have been able to find buyers at the $14 level 3 or 4 different times. But boy, if those 14s go, you might be looking to be hitting some bids, because below your December 5th low of 14.02, the previous day's low was way down at 13.08. But just notice the resiliency in the 14 handle. I'd say 3 different times since you traded up to 16.50.
All right, 8:15, time for our first break. We're going to go grab Nate Tobik of CompleteBankData.com. Welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel, joined by Joel Elconin, and we're on the line now with Nate Tobik, investor and founder of CompleteBankData.com, a source of info on banks, banking institutions, and bank holding companies. Nate, how's it going today?
Good. How are you guys doing? Thanks for having me on.
We're doing well. It's a good time to get you on. We've got the banks reporting earnings here at the end of the week. So give us your outlook now for the financial sector heading into the Q4 earnings season.
Right. So I don't think we're going to see any big surprises come up Q4. I think most banks are going to report in line with expectations. The one outlier might be Wells Fargo. And, there's basically the deal with them is they've had all these issues with accounts and, shattered customers' confidence. And so I'd say opinions are split on them. About half the analysts you read say this is just, it's not a big deal. There's nothing to it. Everything will be in line. And, the other half are saying this is a big deal. Earnings are going to be hit. So I'd say Wells Fargo is really the only outlier there to be watching for. But otherwise, things should be in line. The thing that I've been looking at is the impact of the tax plan to these banks. And for a bank that was paying full boat in the past, they should have earnings that are up about 20% after everything goes through. And if you look at the bank indexes, they were trading at, got it here, let's see, 54 when the tax plan was passed, and now they're at 56. So, the market hasn't really digested these earnings changes into the prices. So, if all of the banks were paying at the higher rate and they're all going to be paying at the lower rate, multiples stayed the same, we should see the bank index at somewhere around 65. And that's the KBW bank index. And there's an ETF for that as well. So, I think there's a lot of room for these banks to run, especially after we get first quarter earnings out. And amazingly, all these earnings are higher just because they're paying less in taxes. And for whatever reason, investors haven't fully appreciated that and incorporated that into their models.
What is that? What is that ETF? KBWD? Is that the one?
Yes. Okay. Yeah.
Nate, is that really, can it be reflected in the taxes that soon? They just passed the bill. Doesn't it take a quarter or two for everything to filter through and for it to be, to show up on the balance sheet like that?
Yes. So we should start to see things at the end of the first quarter next year. The tax plan goes into effect. It did. So right now, banks are going to be paying less in taxes. There's also some, there's some other bank specific items, specifically around deferred tax assets and the accounting for that. So there's some banks will take a hit from that, just depending on the balance sheet. That's kind of getting into the weeds there. But overall, for most banks, especially the banks that are more simple, along the lines of they're not doing anything really complicated. They were paying the full tax rate. That they're going to have a huge boost after this, and that comes on the tail of the rate increase. So now we have higher rates. That's a tailwind. We have lower taxes. That's another tailwind. I think this is a time to be, on board the train and seeing where it goes.
All right, we got a question coming out of here in the chat from John Dotson. And he wants us to ask you about the huge write-off that banks will be taking at earnings as they have tax losses on assets on their balance sheets. And now with the 21% tax rate, they'll be tempted to take the write-off. He says C will take a $20 billion write-off, and he is a little bit cautious on the banks here. Balance sheet reevaluations come at earnings times. What's your outlook on that?
So he's right, and there are some rules around that. I don't think the hit is going to be as bad as people are expecting it to be. If you get into the rule, some of it's how much of that asset can be deducted from earnings. So, I don't know if we're going to see these huge write-downs that people expect. If they do decide to write something down, I would say this is a good time to do it. Everything's going well in the economy. It's easy to say this is a one-off, and for investors to give them a pass.
All right, taking a look at some of the big banks here, and I know you like to follow, big ones and little ones. You mentioned the little bit of wariness of the of the Wells Fargo, which just really seemed like all that bad news did nothing but provide a buying opportunity for investors. Just some comments here on some of the big banks, such as Bank America, broke out over the $30 level here. Short-term chart looks, a little overextended, but if you look at a longer-term chart here, we could just be getting going here. You're getting in really some vacuum areas that you had during the financial crisis. Well, a stock like Bank America, a lot of stock, a lot of gaining ground to do. But do you ever see this thing making a new all-time high? That all-time high was made, I think, a little bit before the financial crisis. Yeah, their all-time high was in November 2006 at 55.08. Talk about Bank America.
Yeah, so Bank America, of the big banks, I would not be putting my money on them. So if you look at these guys as a utility, and by utility I mean they're constrained by growth. So they're growing about the growth rate of the economy plus a couple percent for inflation. So you say maybe 5 or 6% is going to be their growth. And of that, they're paying out a lot of their earnings as dividends, and they're buying back shares. And so if you look at that shareholder return, I want to say we just went through this recently. Bank of America was something like 5% is the shareholder yield on their stock. And if you compared them to JP Morgan, which is a little over 7%, that's why there's a lot of fuel behind JP Morgan, because they're able to earn more. They've got a better yield. And if these guys really are a utility in that they're constrained by growth. They're just so big, they're not going to be buying other banks. And, I would say when you're looking at them in that lens, you want to go for the one with the highest yield, and JP Morgan is it. So will Bank of America ever get back to its high? I guess eventually, but it's probably going to be a long time before it gets there.
All right. I want to ask you, going a little bit into the cryptocurrencies here, and, regulation, non-regulation. They've started trading futures on it. But one currency that's really had a tremendous move as of late has been Ripple. And basically what Ripple is trying to do is replace the SWIFT system of transferring money. Now, anybody that's ever transferred money, the fees are exorbitant here. I know it's kind of early in the stage, and Ripple really hasn't developed a whole lot, but do you see any threat coming from these cryptocurrencies as far as something like RIF impinging on profits in the SWIFT system and the transfer system? What's your outlook here for banks, and is there any threats here from the cryptocurrencies?
Right. So I'll give you two answers to that, and I'll answer the question, and then I actually have a bank that has some good crypto exposure if you're interested in playing that. So in terms of the whole blockchain taking over the financial world, the blockchain and doing a transaction against the blockchain is fairly slow. So, if you were to make a purchase with Bitcoin at a gas station for a soda and a bag of chips, you might be waiting 10 or 15 minutes before the cashier says, we got your money and everything's cleared. And so I don't think there's any danger right now to that being taken over. So what Ripple's doing is they have basically in-housed this whole thing. And it's really no different than any other fintech startup. They have their own database. They're doing all their own transactions, and they're trying to sync with the blockchain when they can. And they're avoiding that main blockchain technology. So I think one way I had heard this, one way to think about blockchain or Bitcoin is to substitute the term with slow database. So if you think, where in our bank do we need to put a slow database That's kind of the framework for it. That's not to say that it won't improve, really take things over, but there is a hype and a mania around it. And so one way to play that is Metropolitan Bank Holding. The ticker is MCB. And this is a $1.7 billion bank in New York. And they hold Coinbase's deposits, and they are the clearing bank for all of the wire transactions and all of the transfers out of Coinbase. So for any listeners who aren't familiar, Coinbase is one of the biggest brokerages in the Bitcoin world. They actually have more accounts than Charles Schwab. So, this is a huge company. And every time someone wants to get their money in or out of Coinbase, it's going through Metropolitan Bank. And what Metropolitan Bank does is they're just getting a fee from that. So they have about $100 million in deposits from Coinbase. So that's some of their exposure, but they're a $1.7 billion bank. So if something were to happen to Coinbase, this isn't going to sink them. At the same time, every time someone does do that wire or the transfer, they just get to take a small chunk of that as a fee. And, that's been reflected in their fee income, which is just, it's growing like crazy. So these guys, their net income has doubled from last year. Fee income is double from last year. They just IPO'd a couple months ago. Right now, the stock is about 14 times earnings, like 1.7, 1.8 times book value. So for a bank that's growing this fast, just outside of any cryptocurrency thing, this is a fast growing bank. This is a really attractive bank for anyone who likes growth. And then if you pile on the whole aspect of Coinbase and all the exposure to the fees, this is really a good opportunity. So what I would say here is, in terms of a trade, look to trade MCB right around the earnings. And I say this because when you look at their financial statements, you're looking at their fees from before the real hype of Bitcoin, which came out in the fourth quarter. And I know there was a ton of chatter around Thanksgiving and in November about people just buying and selling, and the price was going wild. And so, I think what we're going to see is a huge jump in earnings in when they report for the fourth quarter from that fee income, just from the Coinbase exposure.
And that earnings date is February 12th. Can you explain that again for me a little bit, Nate? So wait, they own, or explain that relationship with Coinbase again.
Yeah, so they're the clearing bank. So
okay.
To actually get to do a wire transfer, you have to be inside that system, sort of like the SWIFT system. You have to have that banking relationship. So if you or I wanted to wire money, we would have to go to a bank to wire it to another bank. And so Coinbase has that relationship with Metropolitan Bank to be able to conduct the wires for their customers. And that's also the reason why a lot of brokerages purchase banks. So Schwab has their own bank. Fidelity has, they have some tight banking relationships. And that's because customers want to do bank-like things. And the only way to do those is actually with a bank.
Right. All right. I had never heard of this one, but I am now intrigued enough to do more research. So thank you very much, Nate Tobik. He's the founder of CompleteBankData.com. Nate, thanks for joining us.
Yeah, thanks for having me on.
All right. Have a good one. 8:30 on the dot, exactly, folks. So 5 minutes before our next guest. That'll be Phil Davis. In the meantime, let's go to some more ratings. We had a lot of ratings this morning. I guess I'll just run through the list here, and Joel, you can do. I'll run through the ones that jump out to me. I guess first one, UTX, Goldman Sachs upgrading from neutral to buy UTX.
All right, let's take a look at UTX. You can't ignore the firm that's making the move. UTX trading up here at an all-time high in the pre-market. Just made a print of 134.10, hanging out there at 134 even. The former all-time high that was made on Friday at 132.36. So that will act as support, as well as the closing high at 131.57. You just want to see follow through off the open. If you're buying this thing out this elevated level, 134, 134.05, man, you just want to see the 34 and a half, 35, 36. You don't want to see this thing backing and filling it all because really, you can't really find any support until yesterday's high of 132.36.
We also have Caterpillar catching an upgrade this morning from JP Morgan, neutral to overweight Caterpillar.
Now this is interesting because you have the move from JP Morgan, and then you have a little bearish commentary from Barron's over the weekend. It's saying it's time to take profits.
I didn't see that.
But right now the bulls are winning as usual. Your pre-market high was made at 165.20. We've backed off there, so keep an eye on that. I'm not sure if there's any size in the book here at 165, but continuation to that pre-market high, I like it. Coming back on the downside if they decide to put this thing into reverse at all. You have a ways to go to fill the gap from yesterday's trading, 162.05. That was Friday's high, and that was right at the all-time closing high at 161.96. So bulls and bears battling it out here in Caterpillar.
All right, another one, not a ratings change, but a price target change this morning. Overstock getting their price target raised by DA Davidson. They're raising it from $85 to $110. They said, quote, "It's important for investors to understand that buying and owning shares at current levels is a bet on its blockchain-related investments." DA Davidson had been active in this one. They had initiated Overstock in a buy back in September, and they had maintained that all the way through. The price target went from, price target went from $28 to $57 to $85, and now it's $110.
Do you have the timings? Because I would really, one thing that kind of bothers me with Wall Street analysts is when, the stock's at 38 and their target was 28, but they say, oh no, now we're raising it to 40. Well, you already told me to sell it or your target was lower. But what I like about this one here is it's knocking on the door. I mean, it did hit 85 on Friday. It got to 86.55 with the 84.35 close. So can you just give me the last time that they did a price target hike just to see if there's a consistent pattern?
November 10th, it looks like, is when they raised it, or the 9th. The 9th or 10th was when they raised it to $85.
Okay. That's one hell of a call. That is, and where was it at when they did that? Where was their current target? I know where the stock was, but what was their current target?
When it was 57, and then they increased to 85.
This guy's good. I got to give him credit because your all-time high at that time was 56.95, right near his 50. I like this guy. I jot him down. I follow him. I don't know if it's
Tom Forte is his name. DA Davidson is the firm. Tom Forte is the analyst, and he's a.
Could you call him up right now and see if he's got any other picks? That's one hell of a call. Well, I like that. There's one analyst that I really can get behind.
All right. Well, first I have to call Phil Davis. He's the founder of Phil Stock World. He joins us about once a month or so, maybe once every other month, and he can cover pretty much everything we throw at him, which is why we like Phil so much. So we'll be right back with Phil Davis. And welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and we're joined by Phil Davis. He's the founder of Phil's Stock World. Phil, how's it going today?
I'm doing great. How are you guys?
Doing great. Phil, hope you had a relaxing new year, but it is 2018 now, and we're looking for things to buy. When you say, you're looking for things to buy, what are you looking for?
Well, we're doing the hard work. We're looking for things that still have some actual value and also have some growth prospects. They're kind of few and far between in this market. When you see like right now, coals just went up 5% this morning. So anything that gets the tiniest bit of good news immediately jumps up to join everybody else who's already trading at highs.
But how exactly are you looking? Are you looking? Is it technicals? Is it fundamentals? Is it both?
For us, it's all fundamentals. We're not technical traders.
Okay, so what specifically?
We look at the base fundamentals of companies. Like take a company. We like somebody who's good but out of favor, like GE, for example. They're suddenly out of favor. Nobody likes their business. It's too boring. They're changing it too much, and people are confused. But still, it's a great company with a lot of great stuff going on, and that's the kind of thing we like for a long-term growth prospect because it's still cheap.
And what other, aside from the GEs of the world, any other stocks that are on your radar? I know it's tough in this market to find undervalued stocks, but anything else on your radar?
Oh, it's not that tough. We have a watch list, and we have like 40 stocks on our watch list already that are things that are trading at reasonable prices. And if they get any cheaper into earnings, we're going to pick them up. GE happens to be the example I used in our watch list to show people like this is a total value stock that everybody's ignoring right now. Look, Apple's still pretty cheap. Barrick Gold, ABX, is a cheap stock because they haven't moved up with gold, and which makes no sense because they're the lowest cost gold producer out there. Bed Bath & Beyond is a beaten down retailer that we like. So I mean, there's definitely things to buy that you can find, but you can't chase the crowd. You got to look for the things that are being ignored and are out of favor at the moment by the rest of the people.
We're on the line with Phil Davis of Phil Stock World. Phil, I know what you're trying to buy, and I know what you're doing your research on right now. You're looking to find the next Bitcoin in the cryptocurrencies.
Yeah, well, we sold our Bitcoins. When they hit $20,000, we said, forget that.
Yeah? And how long have you been following it or buying it?
We bought 4 Bitcoins for PSW Investments. That's our little venture capital firm. And we bought 4 Bitcoins for $600 each 2 years ago. We used 2 of the Bitcoins to buy green coins. So we have a lot of green coins. And we still have those. And those are actually up more than the Bitcoins are. But then when we had 2 remaining Bitcoins plus for free, we just got handed Bitcoin Cash, right? When they did the split. So we had the Bitcoins and the Bitcoin Cash. We cashed in our Bitcoins. When that day they hit 20,000, when they went on the exchanges and stuff, I was like, oh, those people are morons. So we sold to them, and then we cashed out our green coin cashes. They went up about a week later, and we cashed them out and paid out bonuses for our employees, which was great. So that was like free money.
All right, 2 questions here. One, what got you into Bitcoin? Was it a technical or fundamental play? And what's green coin?
Well, Bitcoin. Obviously, everybody knows what Bitcoin is. Bitcoin was to me, it was a silly thing, but it was at the price it was at the time, which was $600. My attitude was there were only 22 million of them in the world, or not even at the time. And that just the amount of interest in it would cause it to rise in price. I didn't think it would get up to $20,000, but I thought $1,500, $2,000. I could see it going up in price from there. Just the same way like a comic book goes up in price because a bunch of people want it and there aren't that many of them. It wasn't because I think there's an incredible value to Bitcoin. I think cryptocurrency, the concept is valuable. I think that blockchain is incredibly valuable, but it's valuable the way the internet is valuable. You know, it doesn't make every company that has a .com on it valuable. It just means the concept is a good concept. Green coins now, well, the thing I like about green coins is every time a green coin is mined, another green coin is created and is given to people to offset the carbon production that they save. So in other words, if people create carbon credits on a micro scale, like somebody who has a Tesla or somebody who has a solar roof panel, something like that, those people who create small carbon credits that can't be traded on exchanges can get green coins, can get green coins for their carbon credits. And I love that concept. It doesn't work properly, but it might at some point start to work properly and catch on with the environmentalists. So in other words, when you're using the green coins, you're also providing an environmental benefit, which I kind of like. And I think that's really good for like millennials and such who are into such things.
All right, so let's go to a stock that I know you like to pick on every now and then. Tesla Motors had a just incredible run from 3 to over 350 here, and then production worries. But they were defended once again here, kind of trading in no man's land here. Have you still been picking on the Tesla?
Are they still in business?
Oh, you probably got a Tesla or two in your garage, Phil.
I would have thought. I actually looked at the SUV Tesla, but and the leasing wasn't so bad. It was $1,100 a month, which wasn't terrible. But you know, it wasn't as nice as the Range Rover or the Porsche. I ended up getting the Porsche. It's a car. You know, it's everybody mythologizes it, but it's a car, and I think people who don't have them think they're better than they are. You know, they're nice cars, but they're not the greatest cars ever made. When you start spending, here's the thing: the people who look at a Tesla, they'll tend to compare it to their car, which is not a $100,000 car. But people who have $100,000 cars and go look at a Tesla will generally go, eh. You know, it's a different category of car that many people aren't used to. So they're not usually comparing apples to apples when they look at a Tesla. They think, oh, wow, look at all this stuff it's got. But any good car's got all that stuff. And the electric is still just too much of a pain in the ass. We're not there yet as far as it being a widespread adoption.
All right. Rob Hood in the chat wants Phil's thoughts on PAG. That's Penske Automotive Group. Value and its growth rate. PAG, Penske Automotive Group. Roger Penske here. A man that, you hear about Dan Gilbert and Mike Ilitch helping out with the resurrection in Detroit. Roger Penske has been there too. But comments on his company, PAG.
Well, they're a great quality company. It's a fantastic long-term hold. They pay like a 3% dividend. They're reasonably priced, but we're coming out of the super growth cycle for autos. Most of what the growth cycle's has been there was a lot of pent-up demand from the recession. You know, so like in 2009, 10, 11, hardly anybody bought a car for 3 years, and that aged the fleet. And so in the last 3 years, there's been a huge swell of people finally deciding to get new cars coming back to the market, and that's led to like 3 straight years of record car sales. But we've kind of filled the demand gap there, and then you run into sort of a trough. It's, you know, like where most people have pretty new cars, and you start to see the sales trail off a little bit as the cycle moves around. It doesn't mean I don't like them long term. I think it's a great investment, but I wouldn't look at them as like a huge exponential growth thing. I don't think you can extrapolate the gains of the last couple of years to go forward.
And what about the U.S. automakers, GM and Ford, trying to defend their market share? They're at least making cars. GM spirited a 3-day rally from $41 to $44 area. Also, you've had Ford finally wake up, and 4 straight up days for Ford going from.
Ford was one of our pick of ours last week, and we actually added the stock, and we hardly ever add the stock. We usually trade the options, but they're paying almost a 5% dividend, so we picked them up when they were 12 something last week. They were definitely a good one in the bargain basement. But again, I don't need exceptional growth out of them. I just want to lock them in and keep collecting those dividends for a stock like that. That's a fantastic little payoff for a cheap stock.
Right, and they're not going anywhere. Frankie 23. And I don't know if you picked this. Did we talk about Macy's last time you were on?
I think we might have, because Macy's. I was liking Macy's and Limited Brand. Those are my two favorites, and Hanes those are my three retail plays that we had at the time.
All right, you're still in the Macy's. It hit 27. Kind of got hit on the bad news. We'll see if it can rebound with the good news from Kohl's and Lululemon here. Extended run in Macy's. Looking at the daily chart, man, it looks like it's overextended. But if you go longer term, you look at the monthlies. It's a third of its all-time high here of 73.61. What are your current thoughts on Macy's?
Well, I like Macy's. That was one of our top picks, actually, and
okay.
But that was back when it was 20. We were like, "Oh my God, is this stupid?" Now they're up to 24, or so. That's all right. They rocketed from 17 at the low to 27, and now they're pulling back a bit to 24, which is a more normal spot for them, 23, 24. But consolidation-wise and moving out, they're good for 30 long term. So I definitely like them here. And you have to, Macy's, by the way, pays a 6% dividend. So it's a great stock to hang on to. But, you got to realize that when we're playing a trade like this, we don't pay retail for the stock anyway. Like in Macy's, you can sell the 2020 $20 puts for $3.50. So you're promising to buy it for $20 in 2020. You get paid $3.50 for making that promise. Your net is $16.50 coming in. That's just free money. You're getting paid $3.50 to promise to buy Macy's for $20. That's how we start a position in a stock like that.
All right. What about J.C. Penney here? The dog. No, stay away from J. Stay away from J. Okay. All right.
How many tries have they had to get it right, and they still can't figure it out?
Okay, so you're not selling any puts here. Well, you probably can't even get any puts.
They've just done everything they can. They've drastically redesigned the store, and the problem is they keep spending money to redesign all their stores and go further into debt. It's a disaster.
I just want to ask you about the metals here, and boy, nice rally in gold here, $100 off the low. I know you've talked about your silver Wheaton trade, and what about gold here? Nearly $100 rally. When's the last time you've seen a $100 rally in gold? We were not too long ago. We made a low at 12. Well, not quite $100. 1238.30. Just last week, we got up to 12. What was our high from last week? Into 1320 handle here. 1327.30 has been the high of the move. Time for a little back and fill here in gold, or you still like to trade on the long side?
Well, I mean, we'll probably see 1,300 again, but yeah, I like gold. I think the only thing holding gold and silver back right now is Bitcoin, frankly. I think it's just the same kind of people are buying cryptocurrencies that would buy gold and silver to some extent. And I think that that money is being diverted to cryptos that would have been ordinarily moving into gold and silver at this stage in the market. So I think they've got quite a run ahead of them. I think when the cryptos fall apart, then you'll see gold and silver really take off, because people are going to scramble to find an alternate source of currency. As I said before, we like ABX. Barrick Gold is the best. To me, there's no better proxy for owning gold than Barrick Gold, because they're a low-cost miner. So even if gold falls apart, they're still a good producer of the gold that people want. So they'll make a profit even if gold goes down in price. Your gold, if it goes down in price, you just lose your money if you're a gold investor. But on the other hand, if gold goes up in price, their leverage is to the profitability of gold. So in other words, right now, let's say they make $300 an ounce pulling it out of the ground at $1,300. So at $1,400, they make $400 an ounce instead. So that's a 33% increase in profits if gold goes up less than 10%. So it's a fantastic leverage proxy to gold that gives you downside protection, because they have the ongoing mining, and they make money at the mining anyway, regardless of the price of gold.
Phil,
so to me, that's the best way to go on that.
Okay, Phil, I just wanted to ask you a comments from an RBC analyst last week looking for a $10 trillion market cap in the cryptocurrencies. He came to that number by looking at the amount of offshore funds and hedge funds, what they have in the gold market. I mean, can you get on board with that assessment? Eventually, a $10 trillion or more market cap in the cryptocurrencies.
Well, that would essentially make cryptocurrencies equal to paper money.
You don't see that.
And I don't want to say I don't see it because it doesn't matter what you value it at. In other words, in any given day, you only have to trade. I think out of 20 million green coins that exist, maybe they trade 100,000 green coin contracts in a day. So it's not even 1%. It's like 0.1% of all the Bitcoins actually trade in a day. So it's mostly just sitting around being held by people. So it doesn't matter what the market cap, quotes is of Bitcoin. What matters is whether or not people will actually do a transaction at those levels. So the level you're at now in Bitcoin, if people actually wanted to, if all the people who think they have $15,000 worth of Bitcoin, I think it's at 15,000 now. If all those people actually tried to sell their Bitcoin for $15,000, the market would completely collapse and it would be trading at $500 by the end of the day. It's only because people are holding on to it that they have this, and again, big quotes, value that to the market cap. And so any market cap is possible as long as people still sit on them. But as an active, large-scale thing, trading at that level, I think that if anything, it would be the evolution of currency over the next 20 or 30 years, not like any short-term thing that could happen.
Phil Davis, founder of Phil's Stock World, joining us here on Benzinga's Pre-Market Prep. Phil, thanks a lot. We'll talk to you again soon.
All right. Thanks, guys. Good talking to you. Take care.
All right. S&P 500 futures have come off their low of 36.50. Now trying to get into the 27.40 handle. A couple targets on the upside. One would be Friday's all-time closing high of 42.50, with Friday's high right there at 43.25. Your pre-market high, 47.75. You need a 9-point rally to get up to that level. Coming back on the downside, if you do pierce that pre-market low, not much on the downside and for 10 handles until you get to Friday's intraday low of 26.50. Spencer, how you doing there?
I'm still here. I want to cover, before we get to the end of the show, play. Dave & Buster's cutting their fiscal year sales guidance by about $10 million. That was from this morning at around 8:30. They cut their sales guidance and their net income guidance for the year.
Okay, Dave, but has Luke not been going there as much, or what's
Luke,
going on
I guess
here?
Luke has not been going to Dave & Buster's. I don't know.
You guys always bring in those things from there.
The office is full of knickknacks from Luke's adventures at Dave & Buster's.
Exactly. Well, they're taking this information to heart here, trading down nearly $6. We've hit 50 in the pre-market. Your pre-market low stands right where we're trading now at 50.52. 50.60 is your last print. Now, they're throwing some size around here. I mean, there is some major stock trading. This is an odd lot. So there's a big seller in here. They want out, and they are hitting this thing psychological level at $50. Always, keep an eye on the pre-market low. But man, under 50, your November low was way down at 46.07. So could have some more work to do on the downside there. Actually, you had 2 monthly lows at the $46 area. 45.71 was your October low, and then 46.07 was your November low. Man, on a rebound, your guess is as good as mine. Mid-range for the pre-market or the after-hours session is 53.27. In order to fill the gap from Friday, man, you got to get way up to 56.14. Doesn't look like that's going to happen in Dave and Buster's.
I want to go back to the ratings from this morning. We had
Sure.
a lot to get to. One of them that I just saw was, and now I lost it, it was Morgan Stanley, and they downgraded Pandora. That's what it was, a Pandora downgrade from Morgan Stanley. Overweight to equal weight is the downgrade this morning there on Pandora.
What's there to say?
Spotify IPO coming. They're going to eat Pandora's lunch. They already have.
This thing is, who's going to buy it? I really don't know. We are trading down in the pre-market. We are trading down under $5. Now, this isn't anything new for the stock. We got hit in December, and we put in a bunch of lows. Let's just call it 470. So there is one potential area of support. You're still 25 cents away from it. And then the all-time low in Pandora is way down to 444. So I don't know. Whether or not shorts want to bring this thing in. I mean, it seems like every couple months you hear about a potential deal, or it gets a pop and then it kind of withers right back down. Any kind of rally in this thing, over the, if it ever rallies again. Just major resistance here at the 540 level, and even got as close to where did you get to on Friday? Friday you had a high of 5.25, a low of 498. So you're still not really a gap fill if you want to whoop up on this thing. Friday's closed 517, and do we have a couple halts here? IMMU and Gopro?
Yep, I was going to mention Gopro. Remember earlier, I mentioned that I'd seen on Twitter that the analysts at Longbow expected some sort of negative news this morning out of Gopro. The exact quote from the note is, after speaking to a few high-level supply chain contacts Friday to provide more color on 4Q. They expect a negative pre-announcement this week. They also have an investor meeting Tuesday at CES. This is from an account that I follow on Twitter, a great follow, German Trader 71. He or she is excellent, their Twitter feed, especially early in the mornings. But we do have a GoPro halt. And what was the other one that you mentioned? Is that from the chat? Oh, IMMU. Interesting. Didn't see that one. Okay. What's going on this morning? What is Let's pull that with IMMU up.
Minunetics or something like that?
Yeah, I got that one up on the chart. Immunomedics. Don't know what they do. Going to assume.
You know what? We got an optimist here in the chat. Atheon, GoPro halted, getting bought by Garmin. I don't know about that, but nice call there by the analyst from Longbow. I guess loose lips sink ships. We will have to see what happens coming out of that halt here. As I mentioned, the all-time low in GoPro, that was made in this month at 7.39, not too far, trading below that in the pre-market. Fitbit, I don't know, maybe Fitbit. Look perhaps for this to get hit too. That thing has been stalling out at the $6 area. So big news coming on a couple stocks. So let's see how things shake out. All right, Spencer, 8:59. Got about a half hour to the open. Do you want to wrap things up and let us know what's on the docket for Tuesday?
Well, Tuesday is Tuesday, and as is every Tuesday, we are joined by Nick Shaheen, author of Create Income with Option Spreads on MarketFi. He'll be our guest tomorrow, but thank you to our guests today, both Nate Tobik and Phil Davis, who joined us. If you want to catch their interviews again, you can do so on our podcast, iTunes, SoundCloud, and Stitcher by searching for Benzinga or PreMarket on any of those sites. Thanks to those of you who were in our chat, premarket.benzinga.com. Thanks to those of you who called us on YouTube as well on our YouTube channel at Benzinga TV. But that is our show for the day. Hope everyone has a good rest of your day. We'll be back with you on Tuesday.